CFC Stanbic, which is controlled by South Africa's Standard Bank Group, has reported an 81.7% rise in pre-tax profits for the second quarter from a year ago. For more on the figures, I'm joined by Abraham Ogenge, who is the financial controller at CFC Stanbic. Thank you so much for joining us today, Abraham. So let's just get straight into it. We've had quite a lot of Kenyan banks that have also expanded into South Sudan, just as you have, but they have expressed quite a lot of worries with regards to that specific environment. Has that impacted on your business in any way?
Of course, as CFC Stanbic Bank, we started a relationship with South Sudan quite early in the years, and we've seen some of the tensions in South Sudan impact part of our business, but we still believe that South Sudan is a country where we cannot afford to fail as a new economy in Africa. So we still feel that there's a lot of hope in turning up that business there, and we've seen that in our results with the contribution of South Sudan being Kenya shilling 197 million in terms of profit. So we've seen a lot of performance happening, which is quite within the expectation of CFC Stanbic Bank.
Now, Abraham, have you received any sort of clarity with regards to how much money you're going to have to put forward? Last year, you did this through a rights issue to aid with your expansion, but you know the Sudan regulator has doubled the minimum investment amount from 15 million to 30 million US dollars. Have you gotten clarity as to how much you need to put in on the table, and will you be raising more funds?
South Sudan in itself is generating enough internal capital. Last year, profit after tax for South Sudan was in the tune of 150 million Kenya shillings. This year, for half year, it's about 197 million Kenya shillings. So in terms of our expectation around new capital, we don't see that requirement in the short term. We of course, are running South Sudan as a branch of CFC Stanbic Bank, which then means that our capital requirements are a little bit different compared to subsidiaries. But we do expect that we should be able to internally generate capital to support the South Sudan business. Of course, South Sudan is a place where we would want to grow further. Should we require any expansions, we would look at opportunities on how to raise funds to support the expansion.
Hi Abraham, Samantha here. So of course we know that China is playing a greater role when it comes to investment in Africa. We're seeing trade flows strengthening between the two continents and to kind of the continent and of course China. One of your competitors has set up a subsidiary specifically to deal with Chinese business. Is that something that you would consider? I mean, what type of leveraging do you see off the relationship with the ICBC specifically for CFC Stanbic in the East African region?
We, on the corporate and investment banking space, we do have a clear strategy for the Chinese business, and we are looking to get more of the specialist staff within the CFC Stanbic team to try and help us tap into the opportunities that the Chinese business bring into the East African market. Just to let you know, we do have key relationship managers who are focused to try and tap the business opportunities within the China businesses in Kenya, and we are seeing some of that traction coming through. The relationship we have with ICBC has been key to this process, and we expect it to continue being key in terms of giving us opportunities and partnering with the Chinese businesses in Kenya and East Africa.
I mean, give us an idea of what more you could do, in fact, to leverage off that relationship, because there's a lot of speculation as to how this is going to work for Standard Bank Group going forward. So from an East African perspective, what are the specific areas of, as they say, low-hanging fruit for the group?
I think the clear area that comes to my mind is payment and facilitating trade finance between the Chinese market and the East African market. So that would be key. Around the personal and business market is the ability for us to offer private client solutions to some of the people in China who would like to invest in Kenya. So those two areas I see as key. Within the business banking space, import solutions and export solutions would also be part of what we would want to focus on in the short term.
Now, Abraham, give us a sense of what we can expect in the second half, because the interest rates have been low, but they are rising at the moment, and we've also had inflation that is rising quite steeply. What can we expect to see in the second half?
Just to give you a little bit of context on what CFC Stanbic Bank has done to position ourselves for the future, we have reduced our base rate to 13.5%, which is the lowest in the market as at 1st of August. We do expect that the monetary policy would maintain the central bank base rate within the range of 8.5%. That would then mean that further easing of monetary policy would remain, would still be an area where the government would seek to maintain it at the same levels. That means interest rates should correct in the near future. There's still speculation in the market around the strategies that the government has to raise some of the funding they would need, especially on the Eurobond. And we expect that would ease some interest rate so that the interest rate remain within the same range that we have in the year. We would expect that most of our income would then translate through increased volumes.